Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, July 18th, 2023. Before I click through the charts, just want to encourage you to please click like if you haven't already, share the content with friends and colleagues, subscribe to the Wicked Stocks YouTube channel, and please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical video analysis, just like this daily analysis in the Triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves on those underlying stocks. So check out wickedstocks.com. Now for the charts. So we did, yes, Monday close above this weekly channel top that is all week long at 287.17. We did it by the required 1% margin by a hair. 290.37, I believe, is the settlement price, but it looks to be a valid buy signal. 290.04 is the 1% margin, and we did close above it. So this market looks set for a continuation to the upside. Now, having closed, as I was mentioning a couple of months ago, above that 188.47 descending channel top, that carried with it the possibility of a retest of the 414.49 all-time high from November of 21. And now that we're pushing through this channel top at 287.17, I think 3 to 5 months is certainly in the cards. I do need to emphasize that the buy signal is, I don't want to use the word tentative. It is valid, it is actionable, but it becomes complete, if you will, on Friday if we close above 290.04 on Friday for the week itself. This is a weekly channel top. This is a longer term line study, so it deserves that time to sort of percolate, so to speak. But if we close Friday 290.04, it really is all systems go to the upside. I would expect within 1 to 3 weeks, the 313.60 to 314.66 region, we could top out here for a week or two, maybe three, fall back to the 287.17 channel top, which would offer a beautiful buy opportunity if given that chance, say later August. I'm talking a particular scenario here. And then, of course, closing above 314.66 would be yet another meaningful sign of strength, and that 3 to 5 months at 414.49, then a likelihood. So it's looking good right now, but we could back off perhaps. I don't expect to see that. Let's take a look at the daily chart. That same formation on the daily chart is 286.17, the weekly chart 287.17, holding above this area. 295.05 in reach today. 295.05, I'll take you back to that weekly chart. It is nothing more than a 5/8 long-term Fibonacci from the 414.49 high to the January low from earlier this year. 295.05 can give the market trouble. I would love to call this a session containment level, able to contain daily buying pressures. But in light of this recent buy signal above 287.17, I want to keep it light because I think 308.59 is certainly attainable over the next few days. So keep it light at 295.05. I think it's well suited for aggressive day traders. Or any day trader for that matter. If you're looking for the trade of the day, it really is buying the 286.17 to 287.17 region and selling 295.05. I'd rather have you take profits at 295.05 on a long position than aggressively entering a short position. But if you're an aggressive day trader, this is old school for you. You can certainly sell 295.05 outright in anticipation perhaps of 287.17 within the day. If we push through 295.05, we could see 308.59 by the closing bell, although I think it would require a settlement today above 295.05 to yield 308.59 within just another day or two of trade where we can top out on a daily basis. I think I've covered the upside pretty well. Let's talk downside. Now, you know about the 286.17 channel top. If we break back below it, we just might fall to 282.48 intraday. And that is a solid intraday support level. That is the high settlement price from a couple of weeks ago before we backed off. Now we're clearly above it. We gapped above it on Monday. It offers decent day support. So once again, this is well suited for day traders, 282.48. But closing merely back below 286.17 287.17, the writing is beginning to sort of materialize on the wall, so to speak, in terms of buy signal failure. And if we close below 286.17, 270.42 in reach over the next few days, and then assuming we close the week itself, and that's why these weekly settlements are important, the week itself below 287.17, I think over the next week or two, this 253.56 formation in reach. This is our stair-step approach right now in a meaningful way. 282.48 intraday support. If we close today below 282.48, that aggressively pivots the market south through the rest of the week. And so if you went long based on Monday's settlement above 287.17, I would suggest that you liquidate that following a settlement today below 282.48, because we should see within a couple of days 270.14 and quite possibly by the end of next week 253.56, where we can bottom out on a weekly basis and then turn back up into the upper 280s. I'm going to get back to this chart and talk kind of the big picture. I know there's some option traders out there, and I mentioned, when we closed above this 188.47 channel top, how you could reach for 280, 290, let's say, out of the money calls that don't expire for at least several months. We are now in this vicinity. This is an area where you can take profits. Now, in terms of reaching for out of the money calls at 415, you can start doing that, but my suggestion is to wait for the end of the week. Let's see how the week plays out. Obviously, you run the risk that the market could perhaps run into this 310s, 313.60 to 314.60 by Friday's close. That is a real possibility, but I think it's worth waiting for. If we close the week above 290.04, that 1% violation of this meaningful line study, I think you can reach for those 415 out of the money calls that don't expire for at least 6 months. You may even go further out than that. Until then, the question begs, if you bought, as we've been testing this channel top over the last few weeks, did you buy, for instance, 270 or 255 out of the money puts that don't expire for at least a week or at least several weeks? If you've done that, you may consider liquidating those for a loss. Or you could hold out into later week. It's kind of a gray area. There's no right answer per se. It all comes down to your risk management strategy. But we did close above this meaningful formation on Monday. The big question, will it also follow through on Friday? The buy signal right now is actionable. It is early. These things need to sort of flesh out over the next few days. The end of the week will be important. Closing above 290.04 does signal 414.49 by the end of the year or sooner. If we close below 287.17, this market's still susceptible to falling back into the 180s, 190s over the next couple of months, and that would then be clearly indicated if we were to close over the next few weeks below 253.06. It looks more like this. So I'm just going to leave it at that. I think that's all there is to be said for Tuesday's Tesla report. Please click like, share, subscribe, and check out wickedstocks.com.